Hey everybody, Jake here with Jake Woo Market Research to go over the broad market update into the second half of June and just absolutely another crazy week. Before we jump in, we will be doing a more in-depth video for Twitter subscribers for SPY, QQQ, IWM, and a range of trade ideas going into the week ahead and into the second half of June. So this is only going to focus on ES, NQ, CL, Bitcoin, Tesla, Apple, and NVIDIA. So if you do want more in-depth information on more of the trade idea side of things and in the ETF side of things, I'll be looking at SPY, the Qs, IWM. Definitely subscribe on Twitter. I'll put a link in my description. It's $10 a month. You can sign up right through Twitter, and you get access to all of that information as well. So let's dive into it. One thing, if you have been following me on Twitter, I have been using futures charts different than TradingView. On this video, I will use TradingView, but I have been using Optimus Futures charts. So if you're following me, I usually post those in the morning. So if you do want to check out Optimus Futures, they are a futures platform that I've been partnering with. So give them a look. I'll post the website in the description as well. As I mentioned, I have been posting my futures charts on with their platform on Twitter. But for this one, since I will go over Tesla, Apple, NVIDIA, and Bitcoin, I'm just doing all of this on TradingView. So diving right in for ES, I mean, just the whole market, especially NQ and ES, really had a huge rip this week. And at this point, you know, it seems like we're overextended. But if you look at it, we really just finally broke out of this range that we were in. And I'll highlight this here in a second. Right here, we were stuck in this range for quite some time. So, you know, this seems overextended, but we were definitely basing for quite a while. The 2022 pivot pretty much from February and March of 2022 would definitely be the main area to watch above from 45.80 to 46.30. Not the best candle on Friday today when I made this video, but you know, the path of least resistance remains higher, but remember, you do want pullbacks when you're moving up. You want pullbacks simply because that's how you get the market to reset a little bit. So what's interesting is we still do have upside here. As I mentioned, it wouldn't be a bad thing to pull back even to around 43.90, 43.95. That's kind of where you had previous support here back in April of 2022, this area right here. So definitely an area to watch down to, as I mentioned, at the top of that area is around 40, let's see, bottom of this zone is around 43.85. Top of this zone is right around 4,400. So if we do get a pullback, keep that area in mind for a potential SR flip. Previous support acted as resistance very briefly on Monday in the beginning of the week. So if we do get a pullback, definitely watch that zone below. Now, if you look at the weekly chart, this is where you can see we're really just starting to break out here. So this previous support from September of 2021, you also had this support back in February and March of 2022. We finally broke through it, retested it here in August of 2022, and we finally broke out. So, you know, it's not a bad thing to get a pullback. I mean, this is a bull market, but you do have pullbacks in bull markets. So if we did pull back, this 42.60 to 43.27 would be your area below. That's essentially just the zone that we just broke out of. After 5 green weeks in a row, you know, it would be healthy for the market to pull back and make an SR flip here. So a previous resistance from August flipping to support in what could be late June, early July. But at the same time, if we do continue to move up, this area that I mentioned on the daily chart, 45.80 to 46.30 would definitely be an area to watch to the upside. Same thing with the Qs, but interestingly enough, we've already broken above this 2022 pivot that we were just talking about on ES. We actually broke through it on Thursday, pulled back on Friday. So pretty much at this point, you can expect a potential SR flip all the way down to around 14,995 to around 15,000, give or take. So at this point, we're just, if we do get a pullback, this is simply just an SR flip until we break below that 15,000 mark. That's also just a psychological level as well. Something to note here is we do have a gap below. So if we did break this area down here, this 15,000 area, and we went to go fill the gap, that gap ranges from 14,526 to around 14,635. I'm not going to get too specific on the cents, but if you want the cents, it's shown here on the chart. And yeah, all in all, a very strong market. And I think a lot of this has definitely been fueled by people just trying to short this market constantly over the last several months, and it just continues to grind higher. And when you have a very heavy short position in the market, you definitely have that fuel to continue to grind higher, because people aren't really buying because they want to. They're buying because they're getting margin calls, and they're just overall being forced to buy. So almost some artificial buying going on there to cover their short positions. But as I mentioned, if you pull back, 15,000 is definitely the sweet spot here below. And if we break down below that, then the gap below would definitely be in play. One thing I wanted to mention on ES actually as well on the weekly chart before I go to the NQ weekly chart is you do have this kind of crest here from back in 2021, this MACD crest. And notice that the weekly MACD is actually nowhere near that yet. And notice when we even did get to this crest after we bottomed in COVID, we continued to grind higher. Just because we got to this crest, it didn't mean the market was done. So, definitely keep in mind that we could continue to just grind higher here, and we'll see what happens going into the week ahead. But I did want to mention here the MACD, and I'll mention the same thing for NQ here. We are now at this crest, so you can definitely see NQ is leading the market here. But notice, same thing, from the COVID low, this crest wasn't necessarily a big reversal point in the market. It's just where the MACD started to flatten out a little bit. So we're at this point now. We'll see what happens. But I mean, after 6 green weeks in a row for NQ, it does seem like we could definitely get a pullback. If I highlight this zone here, pretty much same thing I did on ES. You can see here from October 2021 was your initial pivot here, and then acted as resistance, support and resistance in 2022. If we get a pullback, same thing on the weekly chart, we could go all the way down to around 14,400 and still just be at an SR flip. So previous resistance flipping to support, and we'll see if we get that into the coming weeks after such a big move up. But historically speaking, summer is just really a low volume kind of grind up type of move that we see, especially after 4th of July weekend. So, don't get too married to even the bearish pullback thesis here, but at the same time, you do have to realize that we do get pullbacks in these bull markets. That definitely has already started here. And, it's not an opinion, it's just a fact. We are well above 20% higher than the previous low that we put in October of 2022. And for now, we continue to just grind higher and breaking new highs and breaking important resistance zones above. For CL, finally a chart that I don't have to really go too far back. If you look at this particular chart, the main thing that I'm focusing on is this June 14th, 2022 high. I'm anchoring a VWAP from this high that we saw on the 14th. And you can see how well this has acted as resistance multiple times on the way down. So as we were hitting new lows, we were popping back up to this VWAP and then continuing down. So 1, 2, 3. So at this point, we do have a descending triangle here on the daily chart. At this point, you really are not breaking out of it. So we're really just trading within this descending triangle. If you wanted to play that, you're definitely risking just some chop here within this area. We could still chop for another couple weeks within this descending triangle before we get to the apex. But if we do break out, definitely keep an eye for a potential move up to around $80 all the way up to around 83. And really that's what you're generally see during the summer months. You see an increase in demand for oil, gas, all of that while people are traveling. So if we do get a breakout, remember, descending triangles do have a statistical bearish bias, meaning they are known to break down more than they break to the upside. However, when they do break to the upside, they can be extremely aggressive. So keep an eye on oil breaking out of the top of this resistance zone going into next week, right around, let's call it right around 72, all the way up to around 72, 75. Remember, whenever you have a diagonal zone, these breakout points are changing because the slope of the line is changing the price every day. So for example, if we broke out and this took, let's say that we continued to trade around within this descending triangle, and we broke out in late June, all of a sudden this breakout point is going to be around 71. But going into next week, here we are around 72 all the way up to around 72, 75. So it is not a static level when you're using diagonal zones versus something like a descending triangle here, support zone, where it is just flat and it's static and this isn't going to change. So if we did break down and closed below right around 65, 75, that would definitely trigger a bigger move to the downside. But going into the summer months, it's hard to see that happening. We'll just have to see what price shows us. If we do break out, as I mentioned, definitely keep this area above an eye on 81 all the way up to around 83. On the weekly chart, we actually have a bigger descending triangle. So we have a mini descending triangle on the daily, and then we have even a larger descending triangle here on the weekly candle, going all the way back, starting this descending triangle support zone in August of 2021. So we're getting very close to the apex of this descending triangle as well. You can see that the MACD is not doing a ton here, but if we do break above the zero line, that's when we could really get some momentum. So notice here, back in August of 2022, we broke down below the zero line. You can see that we continued to hit new lows, and that was definitely a trigger for more downside. So if we can break above the zero line, that is something to definitely keep an eye on for a continued move to the upside and momentum increasing as well. Going into Bitcoin, Bitcoin is finally catching a bid here, which is nice, especially for crypto names possibly going into next week. We pretty much just bounced off this SR flip zone. So this was an area that I had mentioned in a previous video. This 25,000 area was definitely your make or break. Notice how we closed right at this area, previous resistance from February of 2023, now acting as support this week on the 14th and 15th of June. If we do continue to move up, not only do we have a descending diagonal resistance zone here all the way up to around 27,100 all the way up to around 27,500, but if you turn on the volume profile, the visible range volume profile is what I'm using on TradingView, you can see that you also have confluence of this break-even supply zone right where this diagonal zone is. So right where the diagonal line is where the break-even supply is showing. Remember, break-even supply is simply just an area where previous holders or people that are holding higher are currently holding at a loss. Once you get back up to this area where they initially bought, where their averages are, their break even, then some people will sell. They'll break even sell, meaning that they're going to take some off the table, maybe remove half the position to remove exposure, or who knows, maybe they actually take the whole position off. But regardless, when people are doing that, it's adding supply onto the market, and that's why I like to call it break-even supply, just to give you some context of what kind of market participants are likely selling when we get up to this area. It's people who bought in early, they're in a drawdown, they get back to break-even, and then they take some off the table. On the weekly chart, we still have a really nice bullish pennant here, nice hammer forming on the weekly candle. You can see here that the all-time high anchored VWAP zone is definitely an area that we need to get above. Notice that it acted as resistance back in, highlight this here, back in March of 2022. And once again, we hit that resistance zone in April of this year. And so if we did continue to move up, that level is definitely an area we want to get above. The actual VWAP is right around 28,830. But this band here, I like to use the standard deviation band on TradingView. So I have it at 0.2 right now. And really it's just looking and seeing, okay, the last time that we broke above the anchored VWAP, we did have trouble getting above this 0.2% band. So the 0.2% band is really just a function of the previous time we broke above. So if we're looking at Tesla or Apple, we may not use a 0.2% band. We may use a 0.1% band. So each stock, each asset, whatever you're looking at, has its own personality. And so that is why you have to kind of play around with this standard deviation band to really capture some of this price action from earlier that we broke out above. So this isn't like a default 0.2. It's just dependent on what stock you're looking at, and then you can mess around with it and see what works in that case. Going into Tesla, This thing has been on an absolute tear, and not shocking, we have had some resistance right at this gap here. This gap was all the way from September of 2022. We finally fully filled it on Friday at 262.47. A lot of the time, these areas can act as short-term resistance zones. However, a pretty strong day here for Tesla, relatively speaking, with the markets down in this green. So if we do break and close above this 262.47 area, then definitely watch for a continuation up to this September 2022 pivot from 284 all the way up to 289. On the weekly chart, you can see here that, pretty similar to what we just went over. We did break out huge through this diagonal resistance zone last week. We moved right up to this gap. This gap actually happened to be a weekly gap as well. So that means that we gapped down on Monday and we never filled that gap. So you can see this weekly gap. You don't have weekly gaps a lot of the time. So that is really a really important zone if we do find some resistance here. And we could even pull back all the way to the 220s or 230s and still just be in a basic SR flip, meaning that previous resistance acts as support. So if we do get a pullback, it's natural. We've literally gone from 165 all the way up to 260 within 6 weeks. So you really have to kind of realize that this type of move generally is going to experience a pullback. And if it does, it's not a bad thing. It's healthy. It's actually needed to continue higher. So if we did get a pullback here at this resistance zone, which is just that gap from September of 2022, we could pull back all the way to the mid 220s or 30s, and it would still be a healthy uptrend. Going into Apple, new all-time highs hit again this week. So this is definitely in a very strong uptrend, and you can see that by this very slight ascending wedge here. I wouldn't even call it an ascending wedge. I just call it like a channel that eventually support and resistance will meet in maybe like 2025. But for now, we are trading near the top of this resistance zone. Not a great candle here on the daily chart. You can see here that the upside resistance, if we did somehow continue higher next week, which is possible, around 188 all the way up to around 190 would be your resistance zone going into the week ahead. And remember, as always, if we just moved like this for a few days or a few weeks, chopped, and then went up, all of a sudden now your resistance zone is around 192 all the way up to around 193. So just remember, whenever you are looking at diagonal zones, that is something to pay attention to, as those areas will change with the slope of the line. Now, if we pull back and we have a strong sell-off and arguably a healthy sell-off, we could move all the way down to the 180s. And 180s seems, like a big number, or at least it did a few months ago, and now this is potential support. So not only do you have potential diagonal support, but you have this previous high here. And if we did just chop around and continue down, the first level would be around 182.50 all the way up to around 183.50. If we broke down through that, that's when this area below around, let's call it in the upper 170s to around 180 would be the next target below. So all in all, not a great looking candle here to end the week. We'll see what happens going into the week ahead. But those are your levels to keep in mind. Now, if you look at the weekly chart, you'll see here that we broke above the previous all-time highs here shown on this horizontal trend zone. Notice that we closed above this area, so a very strong move. If we do pull back, the pullback area would be, as I mentioned before, right to around 180, which is the previous highs here and the previous all-time highs that we saw back in December of 2021, as well as January of 2022. So the 180 area is not only a daily level below, but it's also a long-term resistance zone below, or previous resistance zone, which would act as potential support below. Anytime you get a breakout, always assume an SR flip. Previous resistance or previous support flips to the opposite. So in this case, it wouldn't be shocking to get a pullback and retest that area. Now, if we do close below that psychological level of, let's call it 180, that's when things could get interesting on the weekly chart. You'd want to see an actual weekly close below the bottom of that zone versus just a daily close, since this is really the weekly chart. So your invalidations and your confirmations want to be a function of whatever time frame you're looking at. In this case, this is the weekly chart. So if we were looking for a breakdown, we want to see a weekly close below this zone. And as I mentioned, it's right around 180, give or take a dollar or so. Next one, and actually the last one, is NVIDIA. This thing's been an absolute monster, and honestly, we don't have any price action to look at to the left at this level, so we have to use fibs. So the way I used it is the fib is just simply taking the high here from May 30th, connecting it to the swing low here from June 7th. That creates the measured move that we're measuring, and then the 1.618 extension is the target, simply because, as I mentioned, we don't have anything to go off of because there hasn't been price action here. So a lot of people, when you are breaking to new all-time highs, uncharted territory, you definitely are using the 1.618 extensions and just taking that most recent measured move, and the 1.618 extension is a function of that. That is right around 447.70. If we do pull back, not what I'd call the strongest candle here, and this is a solid candle. Now, these are hollow candles, right? So a hollow candle means if it's hollow, it means that the close was higher than the open. It's kind of like opening a window shade. And then when you have the close lower than the open, that's like closing a window shade. Now, the colors are a function of if you closed above or below the previous candle's close. So in this case, technically, since we closed above Thursday's close, this is a solid black candle because we did close higher than the previous close. And it completely depends on what color candle you're using. If you were using green, it would be a solid green candle. I just prefer to use the black and red candles myself. That's what I've always used. But same thing, if you're using green or purple, it would be a solid purple color, whatever you define as an up day. Now you can see here on this June 7th pivot, this is a solid red candle because it closed below the previous day, and the close of this candle was lower than the open. So it's like closing the window shade, and then you closed below the previous low, so that's why it's a solid red candle. So that's a little bit of a rundown on hollow candles. I get a lot of questions on what exactly these hollow candles represent and the different colors, and if they're open or if they're solid, hollow or solid. So that is how you can interpret these candles that I'm using. For NVIDIA on the weekly chart, this is where you kind of take the 1.8 extension, or sorry, the 1.618 extension with this huge measured move from November of 2021, and then you make that measured move to October of 2022. So if we were just to go on this fib, you would just click the trend line here if you wanted to see what the measured move is. So the top of this wick from November of 21 to the bottom of this wick from October of 2022, that's your measured move. Once we broke out of this previous high, then the 1.8 extension here on the weekly chart is right around 493. So if we did continue higher, 493 to 500 would definitely be a target above. And based on the weekly candle, this is a pretty strong weekly candle. It wouldn't shock me at all to see possibly that 500 area at some point later in the summer. This is a very, very strong name. Trying to short this name, sure, it may work, but why not just work with the trend and maybe buy the dips? Now, I'm not telling you what to do, but that's generally what you're doing. If you're in a downtrend, you're selling the rips. In an uptrend, you're buying the dips. So that's just a way to follow trend, and it will keep you on the right side a lot more than just trying to be, the next Nostradamus and guessing what this high is going to be. For now, new highs are being created, and that's what you have to take for what we're seeing. Now, if we close, and this is a lot of downside that we'd have to see, if we close below this previous low from the gap up in the 360s area, that's when I would anticipate potentially a gap fill below. That gap fills all the way down here at 306.07, but for now, we'd really have to see a daily close below the bottom of this wick here from the earnings at 366.35, and at that point, then it may make sense to join the bears, but until that happens, we're really just grinding higher and hitting new highs. So hopefully this video was helpful, and if you have any questions, you can always post them in the comments. Remember, please like and subscribe if you enjoy these videos. If you do want to join the Twitter subscription for $10 a month, I post daily market updates, I post trade ideas, I post educational content, case studies from previous ideas that we were looking at, and I do a special weekend video for trade ideas and the broad market ETF update. So definitely subscribe, check that out. The video will be out on Sunday, and everybody have a great weekend. Thank you for watching, and have a good one.